Good afternoon and welcome to GrainTV. It's March 18th, 2013. To my left is Logan Burgess and I'm Brock Shimbino. Let's turn over to Fire Tip to see how the grains ended in Chicago today. Corn was up 3 1/4 cents, soybeans off 17, wheat in Chicago down 9 3/4, and Kansas City wheat was off 6 1/2 as well. You know, Logan, I think a lot of the pressure that we saw in the commodity complex and across the markets in general was stemming from what happened over the weekend in the Eurozone.
Yeah, absolutely, Brock. Over the weekend here, we did have news out of Cyprus, a very small country in the Eurozone, but certainly had a big impact on our markets here today. Basically, in order to secure a 10 billion euro bailout, their government has agreed to sell government assets, raise corporate taxes, and really the thing that had the markets most concerned today was a plan for a one-time tax on holdings and savings accounts that were over 100,000 euros. So, as we said, Cyprus is a very small country within the Eurozone, but this was the first time that this kind of action has been taken throughout this whole Eurozone crisis. So it's kind of a reminder to the market that things in Europe still remain very bad and we're far from out of the woods there. Bottom line today was a lot of money flow from more risky assets, as you said, like equities and commodities, into more safe haven assets. We saw treasuries trade higher, gold moved higher, and most importantly here to commodities, and what we're concerned with here on GrainTV is a dollar index was traded up about 1/3 of a point today, really helped move the grain market lower.
You know, it is kind of concerning to see that dollar index rally here. What that does to commodities is make us more expensive on the world market, right, in relation to other countries and our competitors. So that's really could hurt our export sales coming down the road.
Yeah.
You know, speaking of export sales, we did get the export inspections here today. If we take a look at where we stand for this marketing year, for soybeans, you know, we did get 8.9 million bushels were inspected for exports this week. The industry was kind of expecting 13 to 27 million bushels, so we did miss the mark pretty substantially there. If you take a look at where we stand for the marketing year, this green line is actually the seasonal pace we need to see to meet the current USDA expectations. The red bars are what we did experience this week for soybean sales, so you can see we did fall quite a bit below where we need to be, but we still run about 174 million bushels ahead of pace to meet that current USDA projections. A little bit different story for corn. This week we did beat expectations for the industry. 15 million bushels were exported, but we did fall just a little bit short of the seasonal pace to meet the current USDA projections. That leaves us about 24 million bushels behind pace. So soybeans still running well ahead of pace, but we are falling pretty quickly on that pace that we are ahead to meet the current USDA projections.
Yeah, you know, corn really seemed to have some strength here today into the close. Certainly export inspections were helping things out there. Additionally, though, we had some news on the ethanol front that seemed to be supporting the corn market as well. We had some headlines that some key ethanol plants were planning on coming back online. And if we look at the crush margin in Iowa from last Friday, we saw a pretty darn strong number reported there, or calculated there rather, sitting about $1.91 per bushel. That's about 50 cents higher than we've seen it here just in the last couple of weeks. So certainly that could be kind of a high mark there, but in general there could be incentives coming back into the ethanol market to crush more corn and ultimately produce ethanol here in the days to come. But in general, Brock, we kind of take a look here at a daily corn chart here, candlestick chart. I know you and I were talking about kind of the technicals earlier on this chart here. We have this 200-day moving average coming in here, and we have this topside trend line as well. It seems like we've kind of bumped our head there, or that's acted as an area of resistance here in the last couple of days. What's kind of your take on this corn market right now? Might this be a good time to think about pricing some old crop?
You know, I think it would be a good time to price some old crop if you do have some remaining old crop, or at least get a price floor under for new crop. We have seen the new crop contract rally pretty well here as of late. I think the fundamentals are getting a little bit better for corn right now. Like you said, ethanol is looking a little bit better. Exports we've seen have been a little bit better as well. But I think it's going to take some substantial fundamental news to get us above this area. We continue to bump against that 200-day moving average. Right. And without something fundamentally changing, I don't think we're going to be able to get above it at this point in time.
Yeah, certainly. Well, if you have questions about pricing that old or new crop, you can always give us a call over here at the office, 877-472-4607. Kind of changing gears here and taking a look at beans real quick, Brock. Here we have a daily candlestick chart, and really beans here, it's kind of a different story. In Friday's action, we talked about this. We had this short-term trend line here, and we have the 100 and the 200-day moving average coming in here as well. So from a technical aspect, you'd really think that this area would be able to support the soybean market. We had a pretty good close below that area on Friday, and it really seems like we had some follow-through selling here today as a result of that. Certainly the macro situation that we kind of detailed earlier in the show didn't help anything out there, but beans, I'm looking at this and really thinking that we could be due for a move lower here in beans. Certainly we're going to come in here and test this area tomorrow, it seems like, so keep an eye on this general price area right here. But in general, I think 1380 is an area that we could go down and test once again. Certainly acted as support here just within the last couple months.
You know, I'm in the same camp with you. We have the Brazil harvest well underway, over 50% done there, so they're going to be putting a lot of beans on the export market. With this dollar strengthening today, that certainly didn't help our situation. And fundamentally, really, there's not a whole lot holding up beans right now. We have seen our exports tail off pretty quickly over the last couple of weeks. We haven't really seen much come across the news wires as daily reported sales of exports as well.
Right.
So that's definitely starting to be a concern as we head further down the marketing year.
Yeah, absolutely. Coming down the pike this week, we will be having EIA ethanol numbers out on Wednesday. Certainly, I'm very interested to take a look at those numbers, see if we do see any pickup in ethanol production here in the weeks to come with that crush margin moving up a little bit higher. Thursday, we'll be getting the export sales report. As you said, Brock, very important to take a look for that. There's particularly for soybeans here, a lot of concern there. But in general, fundamentally, that's what we're kind of looking at here this week. We'll keep you posted on all those fronts here on GrainTV. But I think that kind of wraps up our show here for a Monday. Thanks a lot for joining us, guys, on GrainTV. Have a great night. We'll see you tomorrow.